broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, finally. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi. Morning.
Hi. Good morning. It's the last day of the week and it's been a bumper rally so far for the market. Looks like we can build on to those gains given what the GIFT Nifty is suggesting. So I guess it's going to be a great weekend as well.
Well, that's right. We had a terrific Thursday. Let's see if it's followed up by a fantastic Friday. But yesterday was a super-duper trading session.
I mean, big gap, and the gap sustained and actually expanded through the course of the day. So, absolutely. So now the only job is to build and not give back the gains that we've kind of accumulated, because the big gap up comes after a few days of consolidation. Let's just quickly tell you what you need to know as we begin another trading session. So, as I said, the Nifty yesterday broke above the previous highs, but it did so in style, and that's what matters. Not the style, but the fact that it was a big gap up, and that basically took us above the previous all-time high, and it's looking very, very good. The big theme for global markets continues to be, as we were finishing last Friday, it was, of course, the state election results. It was very local. The theme was very local and political certainty, etc. As we finished this week, it's basically the fact that the Fed has gone full pivot, right? Inflation be damned. The reason I'm saying that is because, and I said this yesterday as well, it's not as if, GDP growth forecasts have been lowered very substantially in 2024. You look at some of the recent inflation data points, etc. But the Fed has completely gone full pivot. It's been an extraordinarily dovish sort of statement, and of course Q&A from the FOMC day before yesterday. Now, it's not the same everywhere else, and we were kind of discussing yesterday how the Fed is kind of the Pied Piper. The Fed was the first to raise rates and everybody followed, and as the Fed will start to drop rates, everybody will follow on the way down as well. For now, we had something coming out of the ECB. So Christine Lagarde of the ECB essentially said that no rate cuts were discussed in their meeting. I'm putting that exact statement out because if you remember, Powell said that actually rate cuts are coming into view. In his quote, exact. So, and this is not the only thing which Christine Lagarde said overnight, which kind of puts distance between what the ECB's trajectory is going to be and what the Fed is going to do. The euro, by the way, rallied. I mean, a decent rally against the dollar and against most currencies. And something similar played out with the Bank of England as well, where the British pound rallied about 1% plus against the USD. Okay, just to come back to the US session, the S&P was up about 0.25%. The Nasdaq is up about 0.19. The changes are up on your screen. The 10-year yield, that dropped 11 basis points. We were at 5%. We are at, not even 4% now. So another 11 basis point cut, 3.91. Actually, the longer end of the curve, 30-year is what sold off the most. There was about a 15-odd basis point sell-off. But this is, of course, more widely tracked, the 10-year. Dollar sold off. It's been a remarkable sell-off on the USD. At the same time, yesterday, we were talking about a 1% drop. There's 1 more percent drop, almost nearly on the US dollar index. So that sold off about 0.9%. We are at under 102 levels. Oil's up about 3%. There's been a bit of a jump. We dropped to about 72.5 recently. We are back at almost about 77 or so. More on this commodity a little later. So where does this leave us for the Nifty and the Bank Nifty? Now, the Nifty yesterday, as I said, opened with a flourish and built on the gains. So we've closed above the important Fibonacci level, which we've been putting out for the last many days, which is 21,100. We're above that, right? So where do we go from here? The upper end of there's a rising channel stands at 21,750. That's about 550 odd points away from here. That's the first kind of target. I mean, you've got to project higher now, given the fact that we are in uncharted territory, and 21,750 is that first number. This gap that I was talking about, big gap and then sustaining, so that gap area becomes the support, right? And that gap should not be filled. Otherwise, it will seem like the market is getting a little exhausted. That gap area is 2950 to 21,074. That is the high of day before yesterday and the low yesterday. So, that's basically numbers on the downside that the Nifty should not break. Resistance for the Nifty Bank comes in at 47,850. And then 48,566, which is the upper end of the daily Bollinger Band. So that is actually the more meaningful one is 48,566, but the near term is 47,850. Support for the Nifty Bank, the recent low perhaps should come in useful. That stands at 46,887. We've had a massive boom, we've had a massive rally, and in a way, actually, we are kind of leaving off one more week with very strong gains. Last week was 3.5%, and I think this week is not 3.5% on the Nifty, but it's not small either. You know, the GIFT Nifty will come up on your screen. What to do from here becomes the question. The GIFT Nifty is implying an open which is 95 points higher. You know, would you want to chase the market higher? That's the only question now. I would say the answer, at least for me, is always no. Never chase. I mean, give the market opportunities to kind of give you, tell you, provide more reasonable entry opportunities. Could be a mild, it could be a sideways kind of start. And that perhaps becomes much bigger if you're trading from a risk-reward point of view. But that's the kind of market we're in, which is going absolutely gangbusters. Sonia.
Oh, absolutely. The Fed has provided the fuel and we've now stepped on it, right? I mean, we're zooming away in the market. And that's the big question that everyone's asking across the street. What next after yesterday's bumper rally? Now, in terms of sectors, I'm looking out for a couple of pockets. The rate sensitives will definitely be in focus because now, as we head into the new year in 2024, rate cuts could be the theme because that's what the expectation is from the RBI, right? After what the Fed has done. So the focus will be on real estate, on autos, on NBFCs, and these themes are playing out already. So don't miss out on the rally here is what I suggest. In terms of individual stocks, I mean, we've already seen some big moves there. DLF, for example, is at a fresh high. You have auto stocks like TVS, which are at fresh highs. So a lot of these stocks have started to perform already. Within rate sensitives, you also have banks. So the good part is now large caps are starting to perform, and that could be the next big theme over the next couple of weeks as well. So yesterday, ICICI Bank, IndusInd Bank, DLF, all at fresh 52-week highs. Large caps are starting to perform as FIIs have made a comeback. So if you map the trajectory in the last couple of weeks, the FIIs have pumped in quite a bit. Yesterday, in one day alone, FIIs bought about 3,600 crores. In December so far, 20,500 crores was the amount that FIIs have pumped in. So these are the couple of themes: real estate, NBFCs, auto stocks, and of course the large caps that are making a big comeback. The uptrend is intact. There's no two ways about that. Maybe chasing the market may not be such a good thing, but don't miss out on the uptrend is the feeling that you get across the board. There could be a pre-budget, a pre-election rally, and you don't want to be left behind. So that's the sense you're getting. Today could be a good start. Let's see how we build on to our gains.
Well, you know, Sonia, you'll be in a bit of a dilemma whether or not you should be adding a long position. Yeah. But if you have your longs, you should be maintaining it. You know, because we've consistently been getting good news for the last 2 weeks or so. And if you booked out too early, well, you'll only have yourself to blame. Now, yesterday was as good a session as any. The Nifty started off in the green and we ended virtually at the high point of the day. So that was very, very good. And both the pillars of the market did well. Whether you look at the IT index or the banking names as well, both of them did well. The IT index had to come back stronger because the previous trading session, that one was under some pressure. The FIs, what did they do? Well, they added more shorts than longs, so that's interesting because they added close to around 5,000 short contracts. But yet they continue to be net long with their long positioning at around 57%. And normally you don't want that FI net long position to go to around 100,000 contracts. Or we have seen on both ways, when it goes to 100,000 net short contracts, that time we get a big move up. And when the net long positions go to close to around 100,000 contracts, then you see a bit of a correction. Now, it's good to see that that long positioning is still maintained in that vicinity of around 35 to around 50,000 odd. That's not too worrying according to me. What are the options data suggests? In an uptrending market, you always look at the put writing. And yesterday, we did see the put writing. So 21,100 put, fairly active in trade. 21,200 put as well, fairly active in trade. Between them, they added close to around 80 lakh shares. And there was writing being seen at those levels. But since the markets are moving up, some bulls are saying, why not take a punt, spend 5, 10, 15 rupees odd, buy an out of the money call, and let's see what happens from there, because our maximum loss will be 5 or around 15 rupees. So that seems to be the case because the big addition that we're seeing at around the 22,000 call odd. What are the levels you're looking at? Since we did see some writing at the 21,100 put and the 21,200 put, the 21,050 put becomes, 21,050 mark becomes a bit of a support zone, and 21,115. What I've done is I've deducted the premium from both those two strikes. So that's why we have got that support zone out there. But the Nifty Bank, that can end this year on a high. That's going to be the big driver for our markets. And you just pull up the chart, year to date, till say somewhere around November, you had the Nifty Bank that was actually underperforming. But take a look at the move up we have seen in the month of December itself. The Nifty Bank is actually outperforming the Nifty. And if that is to continue, that's the additional booster shot that you need for the Nifty to move up. The Nifty Bank is still trading. It's up 11%. The Nifty is up 17%. If it wants to narrow that gap in there, I'll tell you what, sky's the limit. This market is moving higher, and it appears it has some business at higher levels as well. So maintain your long positioning, trail your stop loss, and just ride it.
Okay, just ride it. That's the only way to do it, right? For now, you have the markets that's starting. So let's get you some opinion as well coming up this morning for you. First up, on the equities front, Chetan Seth of Nomura maintains their view that 2024 should be a better year for Asia ex-Japan stocks. He says the three pillars of their constructive view are strong earnings growth recovery in 2024, stabilization in valuations, a softer US dollar and better fund flow environment. However, he does not think there may be smooth sailing in 2024 as suggested by market pricing, as there remains the risk of the narrative changing again. For now, he says positive momentum in the stocks may sustain in the near term.
Okay, here's some money market views now coming in. Lakshman and V of Federal Bank says dovish pause delivered by the US Fed was embraced by most of asset classes worldwide. The 10-year fell below 4, marking its lowest level in 4 months. Equities surged. Both G7 EM currencies strengthened against the USD. Rupee, he expects to trade between 83.2 to 83.48 for the next few trading sessions.
Right, and on the bonds, Lakshmanan says the government bond yields fell sharply, tracking US treasuries after Fed officials guided for 75 basis points rate cut by the end of 2024. With rates view moderating, domestic bond prices will probably reposition itself. Food-led spike meant our headline inflation was higher, but core inflation remained benign around 4.1% in the coming sessions. He expects the 10-year benchmark bond yield to trade in a range of 7.1 to 7.25%.
Well, the markets are tending, we are likely to move up. But let's tell you about stocks that we're tracking for you today. We're looking at Hero MotoCorp, PVR Inox, Shriram Finance, Saturn Credit, Army Organics. Those are the top 5 stocks that we're looking at. Add to the list, Anant Raj, Texmaco Rail, Sterling & Wilson, Genius Spa, all of them likely to open up well in the green, while we have KFin Tech that could be a little under pressure.
Okay, Mark Matthews is with us now. Needs no introduction. Mark, great to have you with us here. Appreciate your time on CNBC-TV18. We're speaking after a while, and there have been 2 big developments. One local, which is state election results, and of course the full Fed pivot in that sense. And it's kind of really turbocharged markets. And it's not just India, although India is really top of the pack in terms of returns, etc. But other asset classes, the dollar is down. Yields are the 10-year is under 4% now. What next, Mark? I mean, are we looking at a sustained risk-on rally into the end of the year and into next year as well?
I wouldn't have said so a week ago because I thought after such a strong November, we should rest in December. But there's an old saying among farmers, make hay while the sun shines. And we've had 2 very good pieces of news for the market, as you say. I think, therefore, it can rally into the end of the year. And if it doesn't rally into the end of the year, I think January is going to be good anyway. There's not a lot to be bearish on at this point in the world. And on top of that, the icing on the cake is that stocks are generally not expensive. So the answer to your question is yes.
Mark, hi, good morning. I know you've been a perennial bull on the Indian markets largely for the last couple of years. And in fact, this year has been very good for India. But do you think we can do an encore in 2024? And can the returns be as good for a market like India?
Sonia, the short answer is yes. Number one, I don't think the market is expensive. It's in line with its long-term valuations. And number two, the earnings growth next year will be double-digit. You were talking about rates. I was eavesdropping on your conversation. And so if rates are coming down as well, it's very difficult to see stocks falling in that kind of environment. I think we could repeat 2013 and, sorry, showing my age, 2020, 2023 and 2024.
Hi, Mark. Good morning. Mark, the Indian markets are looking up. As you said, we have everything going for us, right? Crude oil is not moving up. Earnings growth is out here. We got a stable government. And now the Fed, well, it delivered as well. From the Indian market perspective itself, what do you like? Are banks on your radar? What would you do with IT?
Banks have been on our radar since the NPAs bottomed, which I guess was already a couple of years ago. And we remain constructive on banks for the simple reason that there is clearly not enough capacity in the manufacturing sector and in the economy in general. And on top of that, very robust residential real estate market, commercial real estate market, infrastructure spend. So all of those require financing. Banks provide the financing to those sectors and to the economy broadly. So I would stick with the banks. And then beyond that, we've had a preference for the materials on the back of, as I mentioned earlier, the robust real estate market and the increased infrastructure spending. And pharmaceuticals as well, on the idea that a lot of the patents are expiring and becoming generic in America.
All right, Mark, we'll leave it there. Great speaking with you as always and getting a big picture perspective on what the markets are likely to do. The answer to the question, can markets go up a lot more, is, I think as you put it unambiguously, yes. Thank you for joining us here on Bazaar Morning Call. Well, we'll take a quick commercial break here. Our list of top 10 stocks for the day lined up with our research team coming up next. It's a market for stocks and it's going very, very well. So we come back and cover all of that in just a bit.
CNBC-TV18, embarking on a quarter century of excellence.
It is
Embarking on a quarter century of excellence.
Welcome back to Bazaar Morning Call. Plenty of stocks in focus, so let's get straight to it. Hero Motor will definitely be in focus. The company has bought additional stake in Ather Energy, now taking their total stake to 39.7%. So a lot of these companies going big in the EV space. Parikshit is here to give us the latest on that. Parikshit, over to you.
Well, this indeed is an important development. Hero MotoCorp is the largest shareholder in Ather Energy, and this was one of the oldest EV startups in India. This is also coming at a time when Ather is fully gearing up for an IPO, and many industry sources tell us that this could be the second. So Ather is in the process of taking inputs on the valuation, on the IPO plans. They are in the process of appointing bankers, independent directors, which should all be completed by February. They're targeting a revenue of around 3,500 to 4,000 crores before they hit the IPO, and we're also learning that they are looking to significantly ramp up their retail touchpoints to about 450 locations or 450 stores by the end of 2024. That is about 20 stores per month. They've got the launch of a family scooter also coming up. So all the funding that is coming from Hero MotoCorp will go towards expanding their footprint across the country. They definitely need to go for massive sales expansion across the country if they have to take on the likes of Ola Electric, TVS, and Bajaj as well. So this is what the money is going towards.
All right, thanks a lot for that. And, just to put it into perspective, Ather is the third largest player in the electric two-wheeler space currently, after Ola and TVS. Ather currently has 11.7% market share. And if you're looking to play this electric vehicle theme, and if you feel like stocks like TVS are expensive, Hero MotoCorp is actually inexpensive compared to its peers. So if you look at the valuations, as per FY26 valuations, TVS is trading at 30 times, while Hero is trading at 16 times, and Bajaj Auto is trading at 19 times. So Hero is still the cheapest of the lot if you're looking at, the valuation game. Of course, a lot of them going big into the electric vehicle space. But let's move on. Abhishek is joining in. He has PVR, Inox and Shriram Finance on his list. Abhishek, over to you.
Well, Sonia, to begin with, sources tell CNBC-TV18 that there could be a block today in PVR Inox, and it could be potentially a clean out trade over there. So plenty private group and multiples private group to sell stake. Combined, they will be selling about 2.33% stake in the firm. Total book on offer is about 2.33 or about 404.5 crore worth of trade. So offer price is about 1,750 per share to 1,770 per share. It could be a discount of up to 1.1% to yesterday's closing price. Kotak Securities is the banker to the deal. Shriram Finance, a money control story over there. Shriram Finance has revived stake sale plans with respect to Shriram Housing Finance, one of their subsidiary, wherein they hold about 84.8% stake. The deal has been relaunched with a clutch of investors, and discussion have begun both with corporates as well as private equity players. So Shriram Housing Finance needs capital to grow, and even a minority stake could be sold over there. Avendus Capital, JM Financial and Barclays are the likely bankers as per the money control story. Back to you.
Well, that's an important one, and what a big move Shriram Finance has had. Used to be the cheapest. I mean, actually, for its size, which is nearly 2 lakh crores in AUM, perhaps still would rate as one of the cheaper NBFCs. So 21.18 on Shriram Finance. There are more blocks. KFin Tech in focus, Saturn Credit Care in focus. Vivek has got more details. Vivek, morning.
Well, good morning. Block deals continue. So KFin Tech, a very large block deal is anticipated here today. So General Atlantic is looking to sell as much as 10% stake in the company. The base size is 6.2%. The remainder is the upsize option. The block deal size, at the base size would be a little over 500 crores. And with the upsize option, it will come up to 833 crore. Remember, General Atlantic held 48.18% stake at the end of the September quarter. The floor price for this particular block deal is at 490 rupees a share. We had access to the term sheet. The other stock on our radar is Saturn Credit Care. Yesterday, the company held a board meet to approve a fundraise. Sources tell us that the company is looking to raise up to 250 crore with the indicative issue price at 230 rupees a share. The dilution at this particular fundraise is 10.9% of the pre-issue outstanding share capital, while the company raising funds in order to augment its capital base in order to do further lending.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Sonal. She's here to tell us about two stocks that could be in the green. One is Ami Organics and Anant Raj. Sonal.
Thank you so much for that. Let me start with Ami Organics. The company has gotten into another agreement, a definitive agreement with Fermion, where they will manufacture a couple of additional API for Fermion. Now, remember, they already had two contracts, one in November 2022 and one in September 2023. These products will be manufactured at the Ankleshwar facility, which is to be commissioned, and it will start contributing to revenues from FY25. So it's another big order. We don't know the size, but yes, this would mean some green on the stock today. Anant Raj, there's an interesting fundraise here. The company has approved preferential issue of equity shares and warrants as well. The preferential issue of around 25 crore rupees is done to Gagandeep Credit Capital Private Limited, which is Nemisha's firm. And Nemisha is the co-founder of Enam Securities. So that is some big investor coming in. Issue of convertible warrants is also done to the tune of 50 crore rupees to the promoters. It is something that can be converted after 18 months. We do not know the conversion price, but yes, there is fundraise coming in Anant Raj.
All right. Thanks a lot for that, Sonal. Well, let's hop across to Vivek now. He has some more stocks that are in the news this morning. Vivek, what are you looking at?
Well, quite a few stocks on the radar. First on our list, Texmaco Rail. The company has received a work order of over 1,370 crore. This is from the Ministry of Railways. The order pertains to manufacturing and supplying 3,400 wagons. The second stock, Sterling and Wilson Renewable Energy. Couple of updates over here. Number one, as expected, the company has received a settlement amount of 254 crore. This pertains to a settlement agreement that the company had with its supplier, that is Jinko Solar. And also, the company yesterday updated the exchanges that they have completed the 1,500 crore QIP that they had embarked upon. The third stock on our radar, Genus Power, another order win coming in over here. The company has received an LOA or a letter of award of over 1,225 crore. This is for the appointment for the company for advanced metering infrastructure service provider. The company says since July 2023, they have secured 7 orders, taking the total order book or the order inflow to well over 16,180 crore.
Thanks a lot for that. Well, in case you missed out on any of the stocks, here's a quick recap of our top stocks with positive news flow. There's Hero MotoCorp, PVR Inox, Shriram Finance, Saturn Credit Care, Ami Organics, Anant Raj, Texmaco Rail, Sterling and Wilson Renewable, and Genus Power Infra. While stocks with negative news flow this morning is KFin Tech. But Vivek is still with us for some insight on the three big... Okay, before that, let's hop across to Manisha Gupta now to get a roundup of all the action
from the commodity markets overnight. Manisha, hi, good morning.
Morning, Sonia. Thank you for that. Well, it's been a great week for most of these commodities, and today in Asia, we've started on a stronger note as well. The weakness in US dollar, which is now trading at a 4-month low, clearly has been a supportive factor, and this is coming after the US Fed meeting and the comments therein. So when you look at the crude oil prices, we are headed for a first weekly gain in almost 2 months. The markets also are reacting to the OPEC and the EIA monthly statements. Both of them expect the world consumption to increase in 2024. Obviously, IEA believes that it's going to be 1.1 million, while OPEC has put in a number almost double at 2.25 million barrels per day. Having said that, there are growth expectations in the next year, and that has been supportive for crude. Not just that, the metal prices also are headed for a strong week, whether it's copper, silver, gold, aluminum, zinc. All of these metals are up anywhere 2 to 3% for the week right now. Even as the Chinese data that has come in today is not all on the stronger side, but the market's clearly picking their best at this point.
Okay, all right. Manisha, thanks a lot for that. Vivek joins us again to tell us about some insights on the 3 big passive index revisions today. Vivek?
Well, absolutely. So today, there will be adjustments pertaining to 3 passive indices, where fund managers would be tracking. The first one is, the FTSE index and the changes over there. The second one is the S&P BSE indices. And the third one that we don't speak about too often, but, right now the tracking is improving and increasing. So, that's something also that we are keeping an eye out for, which is the Dow Jones Emerging Market Sustainability Index. So for the FTSE November review, something that we've already highlighted earlier, Mankind Pharma is included in the FTSE All World as well as the All Cap indices. Nexus Select Trust 2 is one particular stock that will be included today. And keep an eye out for HDFC Bank as well. Post the merger, remember, FTSE had indicated that they would be increasing the weight of HDFC Bank in 3 tranches. Today, you will see the second tranche of over $450 million coming into the stock as part of the FTSE rejig. S&P BSE indices, so the BSE 100 index, while not many active fund managers track this particular index, so changes will not be happen. However, it is an index that is benchmarked in order to assess the performance. So some important changes coming in there. Stocks that are entering the index are TVS Motors, Hindustan Aeronautics, PFC, Yes Bank, APL Apollo Tubes, Persistent Systems, and IDFC First Bank. These come in at the expense of Tata Elxsi, Adani Power, Voltas, Bandhan Bank, Emphasis, Crompton Greaves Consumer, as well as ACC. Now, the third one that we are talking about is the Dow Jones Sustainability Emerging Market as well as the Sustainability World Index. Remember, companies have already informed the exchanges, but a couple of stocks to keep on the radar. Total tracking, of this particular index overall is $55 billion. India's share is close to $3 to $5 billion. And within that, some stocks that are entering the index, Embassy Office REIT, JSW Steel, UPL, as well as Godrej Properties. And in the Sustainability World Index, JSW Steel, UPL, and Dr. Reddy will make their entry today.
All right, Vivek, thank you very much for that. So that's basically the list of stocks you need to watch out for. We'll take a quick commercial break here. Siddharth Khemka of Motilal Oswal Financial Services joins in for some quick fundamental stock analysis. Later, we'll also connect with Devesh Sachdev of Fusion Microfinance to talk about a large block deal which happened there. Stay with us.
CNBC-TV18, embarking on a quarter century of excellence. On a quarter century of excellence.
Welcome back. Hope you're having a good morning. Well, another day, another green start is what we are bracing ourselves for, but plenty of stocks to discuss. Siddharth Khemka, Head Retail Research at Motilal Oswal, joins us on the show. Hi, Sid. Morning. Thanks so much for joining in. Well, with these rate cuts that we're looking forward to from the Fed in 2024, the onus could be on the RBI now. How much are they going to trim rates? And because of that, the real estate space seems to have got an additional booster shot. How would you view this space, and what are your top picks from here?
Yeah, very good morning, Nigel. Glad to be on the show early morning. So if you look at the indication from the US has been that there could be up to 3 rate cuts in 2024. So in the range of 50 to 75 basis points is what the street is expecting. We expect the RBI to follow suit and follow suit to what the Fed would do. So if you look at while the India GDP growth estimates have been hiked by RBI in the latest monthly meet, we believe that growth is something that would be driven high, and that is why RBI may not be very aggressive with a rate cut, and hence would reduce rates by only 50 to 75 basis points.
Aye, please.
Okay. Siddharth, hi, good morning, and thanks for joining us on the channel. I wanted your thoughts on how you would approach some of these EV-related stocks, right? There's news flow on TVS Motor, there's news flow on Hero. Hero is now increasing their stake in Ather Energy. And there's, of course, the Ola IPO that's coming through. They're going to file the DRHP by the end of the month. Would you buy any of these listed stocks now?
Yeah, Sonia, good morning. So I think if you see within the auto space, two-wheelers have seen the highest penetration in terms of EVs. And the listed players were late in the party, but somehow some of them have managed to get penetration. TVS has a strong foothold in the EV two-wheeler space. Hero Moto, through its stake in the Ather, which is one of the larger EV two-wheelers companies in India. So I think with the Ola Electric IPO, the space would be in a lot of buzz. And we definitely see a lot of room for the two-wheelers companies within the overall auto space for more upside with the growth, not only in the EV two-wheelers, but also in the core business. With the festive season now over, the focus is now more on the two-wheeler companies with the ongoing wedding season and the rate hikes that would come for the passenger vehicles with the new model launches expected in the Jan month. So I think two-wheelers is something that would continue to do well. We prefer Hero Moto within the space where we have a very positive view. Stocks have definitely run up and valuations they leave little room for upside. But then if Ola Electric IPO valuations would be at a premium price, that could again bring a lot of focus or comparison to the existing players and could bring more upside. So we are positive on the two-wheeler space with Hero and TVS as our preferred picks.
Okay, all right. Okay, just stay on. We'll come back to you in a bit. We actually have the management of Fusion Microfinance with us. Yesterday, it was a CNBC-TV18 news break where my colleague Nisha alerted us about the large trade in the stock, and now it's confirmed 10% equity has changed hands in Fusion Microfinance, with Bogwag Pinkasam selling their stake at 555.6 rupees a share. Devesh Sachdev, who's the MD and CEO at Fusion Microfinance, joins us now to discuss more on this large trade and the outlook on their business as well. Devesh, thanks a lot for joining us here. I want to first ask you about the regulatory challenges that have happened. RBI has sort of clamped down on unsecured loans as well. So there is a lot of talk about how this could impact businesses in your industry. Just from for the benefit of our viewers, wanted to understand what could the impact of this be?
Yeah, I think so. A very good morning. One, microfinance is excluded from this new guidelines as far as the risk weightage is concerned. In my view, I think this is a good step by the RBI, because there were cases where, especially at a less than 50,000, through digital medium, which are companies which are outside, sometimes also outside the regulatory landscape, without any client protection, such kind of things were happening. So in my view, and also if you see, this was prior to COVID, that was the risk weightage, so they've only brought it back. So, but yes, overall, I believe, even though microfinance is not is excluded, but there will be certain, overall the bank's cost may go up, and which will impact the cost for us. But
I was going to ask you, do you think there's a chance that the cap could be placed on micro MFIs as well? And if it's done, overall, what will if you can quantify for us what the impact would be?
Yeah. So look, if you look at the microfinance sector, after 12 years, regulator has moved from a rule-based regulation to a principle-based regulation. So I believe that regulator will not do a flip-flop too fast. Second is that if we looked at overall the vision of the regulator in the financial sector reforms, it is more about let the market forces play out. Yeah. Third is the microfinance rates in India are one of the lowest. Okay. The fourth is, I can tell you because I also was part of the MFIN, which is a SRO. We've looked at the top 10, 15 companies. I think there's nobody has boiled the ocean there. So I think what the governor or the regulator is they're talking about is that they're trying to caution companies, and they may engage companies at individual level wherever they find there's an outlier. Okay. But I don't see that, I don't believe that there will be certain cap which will be coming.
All right, Mr. Sajay, just wanted to, first focus on the recent piece of news that came out where Warburg Pincus, they had 39% odd. They sold close to on 10%. There'll be a bit of a lock-in period, but have you received communication from them? What is their intent? Will they look to sell post that lock-in period, or do they intend to hold it for the pending 29% for the next few years?
Yeah. So, Nigel, when we went for this block, we had 4 or 5 outcomes in mind. First, yes, some liquidity. We were very clear. We will, out of their holding, around 10 to 15% they should be able to sell. Okay. They have sold 16%. The second was very important for us as a company was that to bring marquee long-only investors. We are very happy to share that a name like HDFC Mutual Fund has picked up a major stake out of the block.
Yes.
And the third, issue was that, we wanted an outcome where we want to expand our overall cap table, which has happened now. We have top mutual funds now, and in a very short period of time, in 1 year of a journey. Coming to your point on the lockup, yes. So, look, they are patient investors. Okay. Creations, it is between Creations and Warburg. Creation came in the cap table in 2016. They still have a long-term horizon of 3 to 4 years. Okay. And I can tell you categorically, there is no supply coming in the short term soon.
What is short term, if I can press you on that?
No, what people are talking about, 60 months or something, 60 days or something. We are not, there's no such plan because...
But, Mr. Sajdev, 60 days is
No, I'm saying even in 60 days. So you will see.
No, I'm saying, so between Honey Rose and Creation, what is the stake left?
They are around 52%.
They still own?
52%. Yes. And they have a 3 to 4 years of horizon.
So they will not sell anything, I mean, the first they will sell is only after 3 or 4 years. Is that what you're saying?
No,
you have that commitment?
Saying, no. What I'm saying is, this overall, they will reduce their stock, overall share in the next 3 to 4 years.
Got it. Over the next 3 to 4 years, they will keep...
yes.
So any kind of a plan that you have, I mean, that you discuss with them, how they plan to go about doing this?
So, look, as I told you that the first block, we wanted to have a decent size that we have achieved. Okay. By having the 16% of their holding, we have been able to sell. So I think that's a very decent, they've got the liquidity. We're back to the business.
So one block every year, 2 blocks every year, some idea.
So, I mean, look, I cannot, but I can only say only one thing, that there's nothing which is, supply is not going to come very, very frequently. That's what I can tell you.
All right, so let's keep that aside. But what you can tell us about is about how do you see business shape up, right? Yeah. The AUM as of now is around 10,000 crores approximately. And there was some impact, I think, of floods, which could impact growth. Could you tell us, where do you see this AUM of 10,000 crores headed? What is the growth rate you're looking at for the next few years? Point number one. And you got a rating upgrade. That was potentially going to reduce the cost of funds. How do you see cost of funds panning out, and what is the NIMs we should work with?
All right. So I'll first come on the growth. We have been saying this, that we are a long-term player. We are looking at anywhere between mid-20s kind of growth. That's where we are sticking to. Yes, there was a temporary impact which we forewarned in the first quarter only. But let me tell you, I mean, this quarter you will see a better growth. Okay. We are the disbursements have picked up. Overall, we are doing around 850 crore of disbursement now, per month. So that has picked up. Coming to your second point on the NIM.
Yes.
Look, Nigel, when we came to the IPO, we clearly gave a guidance that we want to first reach a NIM of anywhere between 11.3 to 11.5. Okay. We are, as of September, 11.12. We are, this quarter 3 or quarter 4, you will see us reaching there. Then we will take a call, depending, or we'll optimize the shareholder, optimize our customer. We'll look at our customer and the sensitivity of the regulator. So and depending on that, I think we will take a call that, okay, what is the long-term NIM we want to achieve. So
you said mid-20s growth rate, so that's for FY24, is it?
Oh, I'm talking about next 3 to 5 years.
Oh, next 3 to 5 years.
5 years. That's the kind of growth we want to maintain.
And by the end of FY24, what will the disbursement growth be?
No, I think we have this quarter, I think disbursement growth would be at least 10 to 15% of the last quarter.
Yeah. Okay. Mr. Sachdev, we spent a lot of the sort of conversation on the technicalities of how this further stake sales will happen. We'll get you back for a deeper dive on the business itself. Yeah. Thank you very much for dropping by.
Thank you.
Speaking with us here on CNBC.
Thank you. Thank you.
Well, I think, we are just sort of ticking, the clock is ticking away to the pre-open session, so we have to take a quick commercial break at this stage. We'll come back and Anuj will be in the studios with a quick check on what he's watching. Our top stock picks of the day with our technical and F&O experts coming up as well. Stay with us.
CNBC-TV18, embarking on a quarter century of excellence. DOMS, embarking on a quarter century of excellence.
Okay, welcome back. 13 minutes to go for the pre-open session. Anuj is here with how he's looking at things. Anuj, morning.
Morning, Prashant. You know what, today I'm not going to talk a lot about levels, etc., because it's a market which is honestly not about levels anymore. It's about macro triggers, and honestly, it's about perhaps rate cuts from here on. The US Fed's change of stance, like we discussed yesterday as well, is a big macro trigger, and normally big macro triggers lead to 3-day rally, like you had straight after the election result as well. So we had a rally yesterday, we're likely to have a rally today, and maybe even on Monday it's possible. And from here on, you want to focus on the rate sensitives. I think autos, real estate, NBFCs catering to all the consumption spaces. I think that's the pocket to focus on. The market's theme will be rate cuts, not just in the US, but back home in India as well, of course, in 2024. And one more thing, I think FIs perhaps are likely to now drive the next round of market rally. It's already visible in the numbers, but you'll start to see this becoming a bit of a norm where FIs are buying 4,000 to 5,000 crores daily, and DIs perhaps might want to take a bit of a back seat. And what that would mean is that perhaps the large caps, and especially the big ones, which are still to play a bit of a catch-up. HDFC Bank, by the way, started to do that. It's up 10% in 1 month. So I think the others may also start to join in, the ones which have not yet participated in this rally, and that could be the space to focus on from here.
Okay, Anuj, thanks a lot for that. So FIS coming back and don't want to miss out on the party perhaps. So that's the order of the day. Siddharth Khemka is still with us. Siddharth, the stock of the week undoubtedly has been IRDA, right? I mean, 70% rally in 1 week. It's really blown the lid off. But at this price, at 120, how does it look?
Sonia, so if you look at the market has been pretty positive on all the public sector enterprises, and with the rate cut announcement, I think all the lending NBFCs have also been in focus, be it IREDA, be it HUDCO. Those stocks have moved up like anything. We currently don't have coverage, so I don't have the valuations handy, but definitely that's a theme, the renewable energy theme, which is clearly playing out in the market. And one way to play that theme is through directly the OEMs, the Suzlons, the Inox, which have also done well in the market. But IRDA is a good proxy to play the growth in the renewable energy demand in India. So that's the view. I don't have the valuation, so you definitely need to have a check on that.
Okay, all right. What we'll do is we'll get you some technical and F&O trading ideas as well. Mitesh Thakkar is with us, and Shrikant Chauhan also joining in with exactly that. Gentlemen, good morning. Friday FOMO. I mean, I don't know how else to put it. It's just there is some serious FOMO, at least in many pockets of the market. Momentum begets momentum, as they say, and there's a chase on. But should you participate in the race? The chase higher is the question. Mitesh, answer that. I mean, let's just begin there.
Morning, Prashant. So I think I've been maintaining that with the kind of breakout which the indices made above all-time highs, I think you will see a sequence of higher highs being made, which means that you need to participate in the game. Of course, there's always a risk of a trading stop loss being hit, and for the timing, I would suggest that to be around 21,000 on the Nifty. If you recall, the earlier part of the week. I think, we had a consolidation when we had about 3 or 4 intraday highs around the 21,000 mark. And now that should act as a support area or immediate support area. The longer term supports come in slightly lower at 20,700. But I think as long as 21,000 doesn't get taken out, I think the momentum should be on the upside. And we can now look at 21,500, 550 as the near-term target and 22,000 or thereabouts as the medium-term target. So I think maintain a long bias. There is no doubt about it.
All right, maintain a long bias. Shrikant Chauhan is also with us. Shrikant, what are the stock ideas that you have for the day? Because, there are rate sensitives rallying. Large caps are coming back in a big way. What would your pick of the pack be?
Yeah, good morning, everyone. I think, this market is now going to show more sector rotational sort of activity, because now we are expecting furthermore activity in those sectors where the FOMO is still missing or where there is a stable activity. So in that, the way there is a fall in the dollar index, we can expect activity in metal companies. The way the bond yield is coming off from the highs, we can expect activity in IT companies. So I think there we need to focus. And also, if the landing is a little bit smoother, then we can expect activity in pharma companies. So broadly, we are of the view that if there is any correction in the market after opening higher, then on dips, certainly we should look for adding positions close to 21,200, 21,100 levels. Now we are expecting 21,000 is going to act as very good support for the market. And for the bank nifty, there also we feel that 47,500 is going to act as support. But Nifty IT index has crossed its 33,500 levels, which was its biggest hurdle. So from here, we can expect 37,000 sort of level. So if we are expecting 10% rally in Nifty IT index based on its formation, then that will translate to nearly 15 to 20% activity in Nifty IT companies. So I think we need to focus on these areas.
Okay, all right. Mitesh, what about your position picks?
Yeah. So, morning, Nigel. I have all buy calls and many of them coming from the banking and financial side. Chola Finance, I think, appeared to have given a breakout and started a new trend on the upside. So that's a buy. Chola Finance, I would recommend buying with a stop at about levels of 1209 and a target of 1265. AU Finance and Bank is also a buy with a stop at 742 for targets of 795. A buy on Indus Tower. It's kind of managed to get past that important level of 195. So keep a stop just below that. Look for a target of 215. And India World Housing Finance is a buy with a stop at 207.5 for a target of 225.
All right. And Shrikant, what about you?
Yeah, for the day specifically, I would like to go with the mid-cap IT companies. And yesterday we saw substantial rally in almost all the companies. But KPIT, which is currently around 1480.82, there we are expecting rally towards 1550 or maybe even 1600. So at current levels, KPIT technology is a buy with a stop loss close to 1440. And the other stock which we like is from the pharma space, Mankind Pharma, where we saw bulk deal in last 2 days, and it is forming some reversal formation. Based on that, we are expecting stock to move towards 1950 or 1975. So Mankind is a buy at current levels with a stop loss close to 1830.
All right, gentlemen, we'll speak again. Thank you very much for now. Mitesh and Shrikant, for taking out the time being with us here on CNBC-TV18. We'll take a very quick commercial break here. With the pre-open session coming up on us, but we also have the country's largest banker, Dinesh Kumar Khara of SBI, will join in as they hike lending rates on most tenures by between 5 and 10 basis points. A little after that, we've got one more very exciting management coming up, a conversation with Baldev Prakash of J&K Bank, a super-duper response to their QIP issuance. Stay tuned, those conversations up next.
CNBC-TV18, embarking on a quarter century of excellence.
Powered by
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, there's a big headline that has just come through a while back on SBI, so keep an eye out on that stock. The bank has hiked lending rates on most tenures by 5 to 10 basis points. We're going to chat more about that, but let's find out what you should be doing with the stock itself. Siddharth Khemka is still with us. Siddharth, any thoughts on SBI?
Yeah, Sonia. So I think it's a very positive view that we have on the entire banking space and especially the PSU banks. Now with the rate cut announcement likely from next year, bond yields have already started falling, and which is a big positive in terms of the banks which were seeing NIMS compression. So overall, we are expecting that NIMS should now kind of stabilize from here on. And whenever the rate cut happens, that should see some improvement. If that news that you talked about, if that comes through, I think that will definitely help the banks in some improvement in the overall margins. So within the PSU preferred pick, and we continue to remain positive. We have a buy rating with a target price of 700. Bank of Baroda, Canara Bank, these are some of the other banks within the PSU space that we like.
All right, Siddharth, thank you very much for joining us. It's a pleasure having you with us here on CNBC-TV18. Now, the country's largest bank has hiked the lending rates on most tenures by between 5 and 10 basis points. Dinesh Kumar Khara is chairman of SBI. He's joining us right now to take some questions. Mr. Khara, it's a pleasure to have you with us here on the channel, sir. Could you tell us the rationale behind this move? And also, the governor, the RBI governor, had said that not all of the hike by policy rate has been passed on. So is there more to come, sir, after what you've done today? Okay, I think, do we have Mr. Khara? I think we're just waiting on him. We should have him in just a bit from now. While we do wait for Mr. Khara to be on the line with us, I think Mr. Khara is with us. Mr. Khara, I think we lost you there for a bit. Good morning, sir. Thank you for joining us here on CNBC-TV18. Could you tell us the reason behind the lending rate hike and how much more there is to go in terms of, how much the RBI has done and how much more needs to be passed on to the consumer? Sir. Yes, Mr. Khara, go on, sir.
Hello.
We can hear you, sir. Go on, please. I don't think we have Mr. Khara on that line. It's a scratchy line, but I think we'll have him with us in a bit from now. Let's just go across to Mitesh, who's with us. Mitesh, banks and financials, people are waiting on the rally to begin. I'm not sure if it's already begun or it will. But just your thoughts on what your top ideas are from that space.
Prashant, I think it's already begun. It's made a new high. The banking index, the Bank Nifty managed to get past the earlier high of 46,200. And my understanding suggests that, if you look at the medium-term extension targets, they should come closer to about 50,000 level. So there's still more upside left. Amongst the top names, I am also looking at some of the underperforming banks, which are now turning into performing banks, which is from the private sector side. So Kotak Bank, HDFC Bank top the list. That apart, I think State Bank of India. It's, just on the verge of getting past that earlier highs of 615.20. Yesterday, in fact, we managed to do that. And today, being the weekly closing, will be important. So I think if we can do that, I think SBI should itself head towards 700 plus levels.
All right. Well, in pre-opening, the rates are settling much higher. So don't lose sight of the headline index. There's a bumper move that's happening there. 120 points higher now on the Nifty. That's what the GIFT Nifty is suggesting. And the sensex up about 180 points. Lots of stocks in focus. Texmaco Rail, by the way, has won a huge order. So 11% higher on that one in pre-opening. Sterling and Wilson is the other one, up almost about 5% Jupiter Wagons is up about 5%. So plenty of these stocks that are in the news this morning are up and about. From the frontliners, it's IT. Remember, IT was the big mover yesterday. It continues to see follow-on buying today. And Hero MotoCorp, after raising their stake in Ather Energy, Hero MotoCorp is the one that's up in the green right now. Mitesh, a quick comment on Hero. It's still sub 4,000, but do you think there is more headroom technically?
I would definitely believe that. I think Hero was a recommendation yesterday, and we saw good breakout taking place over there. My sense is that I think the stock is heading towards 4150 plus levels, and on any declines closer to about 3820, 3830 levels, I would want to buy into this one with about 35, 40 point kind of a stock.
Okay, Mitesh, thanks for that. I think we have Mr. Dinesh Kumar Khara finally now. He's, of course, chairman at the country's largest bank, State Bank of India. They've increased rates on most tenures by between 5 and 10 basis points this morning. Mr. Khara, thank you very much. Hopefully it's a better line. Prashant, this side, sir. How much, what's the rationale behind this, sir? And how much more to close the gap between what the RBI has already done, sir?
No, in fact, this was an increase in when we compute the MCLR, there are various cost components. Where so that is something which was there. This is one of the contributing reasons for this 5 to 10 basis point increase. So I don't think there's much of room left out now. But yes, whatever was there, we have already captured this in this 5 to 10 basis point increase.
Would you say we are basically at peak rates, sir? Peak lending rates now
Yeah,
with this?
I would say around the same, around the peak level only, as of now.
And with what we've seen from the U.S. Federal Reserve earlier this week, sir, would you venture to say that maybe policy rates are also perhaps at a peak, and the next impulse should be on the downside?
Yeah, I think as far as the policy rates are concerned, I would say that since we are moving in as far as the direction of inflation is concerned, it is moving in the right direction. So from that perspective, I would say that I don't expect the policy rates to go up for some time. So that is what my expectations are.
Mr. Khara, good morning. With the lending rates moving higher, do you think there would be any impact on loan growth? Do you see a slowdown there?
I don't think so. It's a very nominal increase in 5 to 10 basis point. I don't think it will have any impact as far as the loan growth is concerned.
Okay, no impact on loan growth. Will you be looking to hike deposit rates anytime soon?
Hello?
Yes, Mr. Khara, will you be, what about deposit rates? Do you see deposit rates also moving up?
No, deposit rates are, no, it has not gone up, and we don't intend to have an increase in the deposit rate.
All right. Good morning, Mr. Khara. Nigel on this side, sir. Have corporate loans started showing signs of pickup? Mr. Khara? Oopsie. Let's try again. Mr. Khara, are we audible?
Okay, I think he was on a scratchy line to begin with.
I think he's back. Yeah, Mr. Khara, we have you, sir. Let's try to get in a couple of data points then. Have corporate loans shown any kind of signs of coming back?
Yeah, I mean, as far as the corporate loans are concerned, we do get the proposals and we have got the pipeline, decent pipeline in place. So availment will be, of course, we have seen some kind of improvement, but yes, of course, it always takes a time because majority of the loans are the term loans when it comes to investment. And there is always a lag between sanctioning and the disbursement, and also the disbursement is spread over a period of time. So that is something which is there. But yes, of course, I think the important point there is if at all we have got a pipeline where we have got the sanctioning, that's very positive.
Mr. Khara, just a few more points on the recent RBI move on increasing risk weights on unsecured loans. A whole host of NBFCs, etc., we were speaking with, they were telling us that they're going to make representations to the RBI for some relaxation relief. I mean, what's the latest here, sir?
I have no idea. I have not come across any such thing. But I would say that I think the RBI move was essentially to ensure that there should be healthy growth. They were only trying to curtail the unhealthy growth which was seen in the unsecured lending. So I think from that point of view, it comes from the
we didn't get the last part, Mr. Khara, but have you seen a slowdown in the unsecured loans or loans to NBFCs after the RBI rules came in? Mr. Khara, is my voice reaching you? Okay, I think that's a pretty patchy line that we have there, but that's the management of SBI talking about the hike in lending rates. But let's move on now to J&K Bank. The bank has done a fundraising via the QIP route and has raised 750 crores to discuss how their business momentum changes post this fundraise. We have Baldev Prakash, the MD and CEO of Jammu and Kashmir Bank that joins in now. Mr. Prakash, thanks a lot for joining in. Is this it in terms of fundraising, or would you need to do some more in the in the months to come?
No, Sonia, good morning. We are over with the fundraising for this year. And we got a very tremendous response from all our shareholders.
Okay. So how long will this capital suffice before the next fundraising plan?
So, Sonia, this I think CET1 will be suffice for at least 3 years for us now. And in case of any requirement in next year or maybe a year ahead than that, we will be thinking of only the bond, the Tier 2 bond raising.
Okay, all right. Hi, sir. Good morning. Nigel on this side. And your CET1 ratio gets boosted by what? Around 80-90 basis points? You had indicated that the last time.
Yes, I think we should be touching around 12.7 or 12.65, around to this range.
Got it. All right. What about the growth rate that you were guiding for? You know, you were guiding, I think, for mid-teens, 15 to 18% is what you were hinting at. Do you hold on to that loan growth guidance? And also your NIMs, you know, I think you were hovering around the 3.7 to 4%. What's the range we should be working with?
Nigel, we stand by our guidance in both as far as credit growth is concerned and also the NIMs. The credit growth in the first 2 quarters has been around 16%, 16 to 17%. And given the trajectory and the demand, which is picking up in our home territory also, we are quite confident we will be maintaining this credit growth. NIMs, our guidance has been 3.75 to 3.90, and we have been consistently maintaining it around 4%. We are confident we will be maintaining the NIMs also at 4%, given the high CASA ratio bank has been maintaining.
Mr. Baldev, good morning. Prashant here. Does this open up this fundraise with the strengthened balance sheet, open up new opportunities, sir? Or does it, help you to capitalize what the opportunities already were, were already there? Also talk about, your exposure. I think you were very bullish on the housing segment, which has been one of the fastest growing areas for you. But does this open up new opportunities?
Prashant, one thing which I would like to bring to your notice is the phenomenal growth which we are witnessing in our home territory of Jammu and Kashmir and Ladakh. And this year, the housing loan growth has been about 20% consistently. So that is supporting our effort. And as far as the credit growth is concerned, in both territory, rest of the country also, as well as home territory, overall credit growth has been quite healthy, supported by home loan and the horticulture.
Okay, home loan and horticulture, got it. Your asset quality has improved as well. Do you see it improve further by the end of FY24? And if you can tell us how much of the restructured book can turn bad?
Restructured book is now stable, Sonia. Hardly any slippages we are witnessing. And whatever is left in the restructured book will only be upgraded to standard assets.
So you see your asset quality improving further from here?
Yes, our guidance has been constantly at 4.5%, and we will be maintaining it at 4.5% by year end.
So gross NPAs will move to 4.5% and net NPAs will be a sub 1%, right, by the end of this year?
Yes, Nigel, it is already 1% and it will be below 1%.
Okay, all right. You briefly mentioned about your CASA ratio, and I'm just looking at it. That's come down to around 50.6% odd. It used to be in the mid-50s. Don't you think it's come down drastically, actually? So I wanted a view on that.
Nigel, there's no worry in that. It is basically the interest rates in term deposits have gone little up. So the money has moved from saving bank to term deposit. And today when we are talking, it is already 51%, 51 plus %. Now the farmers are getting money of their crops, of apple crops. This is the time they get money. So this is going to go better from this time.
Okay, and what is the outlook on credit costs going forward?
So credit cost, Sonia, this year as well as the next year will be benign, maybe around 0.15% maximum. Okay. And going forward, once our technical write-off book will be left with only the sticky accounts, then maybe around 0.6 or 0.65% we are expecting.
Oh. Just, Mr. Baldev, just a larger top-down kind of a number with this visibility for growth now. Could you tell us, do you have, what's the upside here in terms of where the loan book can get to in the foreseeable future, where you are now, and internally, what do you think? I mean, this can get to?
So, Prashant, we are in the transformation stage as far as digital initiatives of the bank is concerned, which are going to boost our credit growth, but not this year, maybe next year onwards. And we have taken a lot of steps to improve our home loan portfolio, and also there's a lot of response from our customers, particularly in our home territory. So going forward, we are looking definitely better growth, what is happening now. But this year, I think we will be staying this range only around 16 to 17%.
All right, we leave it at that, Mr. Prakash. Thanks a lot for joining in. That's J&K Bank, been a big mover this year, up 130% in 2023. So, you know, a star of 2023, if you want to call it that. But the star for now is the market. There's no two ways about that. Look at it, 100 points higher is what the GIFT Nifty is suggesting. In a couple of seconds from now, we'll get to that level perhaps. The focus continues to remain on these rate sensitive. So whether it's real estate, autos, NBFCs, rate cut is the theme that everyone is working for in 2024. And a lot of large caps are starting to perform as well. So don't lose sight of that. ICICI Bank was at a fresh 52-week high yesterday. So all eyes will be on a couple of these themes as we kickstart a brand new day of trade. Last trading day of the week, and there we have it. 21,286 on the Nifty, a big bang opening, almost 100 points. Remember, this is on the back of that big rally we saw yesterday. So a solid start for the market, building on to its gains, second day in a row. And the sensex as well up about 280 odd points. What's leading from the front this morning is autos. M&M, Hero MotoCorp are your top gainers, Maruti Suzuki as well. Hero, of course, has that additional news flow on buying more stake in Ether, so the street likes that. Valuations are also reasonable. IT is the other space that's been doing quite well lately, so Infosys is your top gainer, up 1.5% as we speak. Tata Steel, JSW Steel, so the metal space is also looking pretty good this morning, contributing to the up move. Now the indices gains are, it's about 80, 85 points is settling over there. We're used to a lot more in the last couple of days. This looks mild, but it's a very good start. No two ways about that. Bank Nifty is also leading from the front. On the downside, though, you have few and far between Bharti Airtel, HDFC Life, BPCL, just stocks that are tad bit soft. Otherwise, it's a very strong opening. Now advancing to almost a 100-point gain on the Nifty. The Sensex is up over 300 points.
Well, that's right. Let's take a look at a few stocks on the broader markets, though, are calling for attention. KFIN, we had that large trade that took place, so that's down close on 6.5%. I don't think I've got a chance to say this in a while, at market opening, but IRDA is down close to around 3%. Normally, that stock has just been moving one direction from listing. It's up more than 3 times, but today, it's pulling back a little bit. Let's see how long that lasts. On the flip side, you have Texmaco Rail post that order bin. That's doing very, very well. In fact, the rail and rail-related plays are doing pretty well today. I think Jupiter Wagons as well was up. IRFC was higher in trade. IRCON is up close to around 2.5%. These are some of the top traded volume stocks. PSU as well as metal stocks. If you have that combination, then that's doing pretty well as well. NALCO is doing well yet again. NMDC Steel is up close to around 3%. Remember, the stock had corrected from around 60 rupees all the way to around 40 rupees. But NMDC Steel has moved up today. And NBCC as well, post that order win. That's moving up close to around 2% out.
All right. Well, it's a it's a good start once again. We're used to good starts, aren't we? I mean, almost 0.5%, 21,270 is where the index is trading at this point in time. Let's just look at the Nifty Bank as well. And then we'll kind of invite in our next guest on the program. Maybe just a... sorry, Sonia.
No, we kind of felt like, spoiled for choice, right? That dopamine rush that we get because of such big gains. I mean, now if it's like less than 0.5%,
it's not
like,
even 100 points on the Nifty.
It's not such a great day, guys. It's just opening flat. But I mean, it's all about the dopamine, I guess.
You're making us sound like lab rats, reacting to stimuli.
Lab bulls, maybe.
Well, but it's a great start once again. Absolutely no two ways about it. Just a quick look at a few other stocks before we go any further. IRFC should come up. We're about 5.5% higher. It's got huge volumes. I think we mentioned NALCO, which is up about 3.5%. Texmaco, Titagarh, etc., 8% and 4% respectively. Jupiter Wagons, actually this entire railway rolling stock theme, I mean, that's doing extremely well. Amber is up 4%. Amber comes in at about 32.30. Sterling, Wilson and Solar, I mean, that QIP I think has gotten done. 435 on Sterling Wilson. Shipping Corporation of India is coming up with a 6% gain, only mentioning things with the largest volumes. Piramal Enterprises is up about 2.25% as well. And then I'll kind of not go down the list. There's a lot, but volumes are still picking up. So maybe in a bit, we'll revisit more stuff which is going on. KFIN is, of course, that block. IRDA, IREDA, 6.5% lower. Humongous volumes, of course, a little pull. This is a 7% drop would qualify as a little pullback because the gains have been so humongous. And HPCL and BPCL, both are starting a little lower at this point in time. Shriram Finance was a big mover, 6%, that's pulling back. And then you got Prestige Estates, which is down about 2% or so as well. So that's what you have in terms of gains. Saurabh Mukherjee is our market master today. He's founder at Marshall's Investment Managers. He's with us here in our studios. Saurabh, great to have you with us here. Thank you for your time.
Thank you for inviting me.
I mean, it's looking blue sky and bluest skies. So it's kind of, sometimes I just get a little, not scared, but are we taking too much away from the future, or this is okay? I mean, what's what we're seeing?
Look, if you look at it, the large cap piece, I wouldn't say we're taking too much away. Large cap is up 14-15% YOY, and in a country where earnings growth is running in the mid to high teens for most large cap companies, I don't think there's that much cause to worry about large caps. It's the small cap piece, which is a little scary. There are hundreds of stocks which have doubled, trebled in the last couple of years. I think that's where there is a bit of a challenge. In any stock market, overvaluation will take care of itself. I think what we are looking forward to in large caps is, with the Fed hikes out of the way, with lack of political visibility out of the way, I think we can look forward to at least a year, hopefully a couple of years of solid share price action in large caps. The economy is solid, earnings compounding is mid to high teens for good companies, and we're looking forward to that over the next couple of years. We're already seeing, in terms of foreign investor inquiries, now that the political clarity piece in India is established and the Fed clarity is established, we're already seeing pick up in foreign visitors coming through India. These are foreign investors, sovereign wealth funds, pension funds coming through India. And I reckon 2024, Prashant, will be a year of somewhere between $20 to $40 billion of foreign inflows.
Do you, by the way, I'm just asking this because we're at that point in the year when maybe allocations, etc., for next year get decided and money starts coming in next year. I mean, do you manage foreign? Would you take those kind of mandates as well? I mean,
so we do that, and as you're rightly alluding to, we are seeing those come through, and we're in the process of setting up some of the accounts, and some of the other accounts we're in the final stages of discussing with the investors whether we get the mandate or somebody else does. But regardless of whether we get the mandate or somebody else does, it is very clear that we will see a decisive uptick in foreign investor inflows next year. This year, I think the country, over the course of the last 12 months, the calendar year, India would have done $5-7 billion. I reckon next year is something like 5 to 10x this number that's going to come in.
Okay, well, the market's continuing to move upwards, so don't get your eye off the headline index. 21,300 is almost here. Look at the pace at which the market is rallying. Saurabh, thanks for joining us. So if you believe that large caps is the place to be, what are the pockets to look at? Do you think IT will come back in a big way? Because the street is still divided on that front.
So I think three pockets where there are well-run companies, and those companies can, their market caps can take a lot of money. The first obvious one is private sector banks. They're obviously doing very well from the ongoing economic recovery. Their share prices haven't done much over the last couple of years, and I think that's an obvious area where we will see heavy foreign inflows. The second is IT services. If the Western economies start turning the corner next year on macro, then those big order books, the bulging order books that the Indian IT services have, those will get translated into business. So over the last 2 to 3 quarters, the Indian IT companies have been very clear that they've got big order books, but the client is not pressing the green button on execution. I suspect some of those green buttons will start getting pressed on execution. And the third is private sector capex. Right? In the last 4 years, government capex has almost tripled in India. Private sector capex has hardly grown in the last 4 years. I think that piece revs into high gear, and we are looking for companies that we can identify to play the private sector capex piece.
Okay, all right. Hi, Saurabh. Good to see you in the studio as well. The last time we chatted, you spoke about a couple of stocks. HDFC Bank, which has been an underperformer. Looks like in the last 1 month, it's finding its form. So pretty good news. And Trent, I think, is the other one that we spoke as well. And that's done pretty well. But before we get chatting about sectors as well as stocks, I wanted to ask you, what's the client behavior? Are you seeing any kind of redemptions? Are flows as strong for the money that you're managing?
So in the local piece, we've seen outflows given our style of investing. And as you're alluding to, stocks like HDFC Bank haven't done much. On the local piece, we've seen outflows over the last 7 months. Thankfully, the product, our investment performance has gone up. So the two have netted out. On the foreign investor fees, we've seen steady inflows over the last couple of years. So the foreign investor and the domestic investor behave a little differently. The domestic investor likes to play the bull market upswing.
Okay.
The foreign investor likes to be the patient long-term investor who's happy to load up, say, on a Asian Paints or an HDFC Bank or a Kotak Bank or a Bajaj Finance and play for 5-10 years. So our domestic investor flows have been negative for the last 6 months. But because the flagship product is up 25% in the last 7 months, that's sort of figured out. And we're therefore left with the main source of inflows being for us, the foreign investor over the last couple of years.
Okay, all right. How have you all changed your portfolio, in the last couple of months or so? Any position that you all have added on to? I think HDFC Bank is something that you said you all have consistently been adding on to.
Yeah.
But anything fresh that you all have done in terms of adding a position or even, lightening a position somewhere?
So I think the piece where we're getting incremental good news is the worst of the Chinese dumping in specialty chemicals seems to be behind us. Over the last 6 weeks or so, for the first time in 2 years, I'm seeing some of the specialty chemical prices rise. So over the last 3 months, we've built a position in Clean Science. It's a company we've been looking at for a while, but now that the scare around actually it wasn't a scare, it was a real thing. Between May to October, China cut prices of specialty chemicals by 25%. With that hopefully behind us, a team from China returned yesterday, and the sense is that the worst of the Chinese dumping is behind us. We've built a position in Clean Science. We like what they have done in what's called hindered amines light stabilizers. This is a very high-end chemical. It's never been made before in India, and hopefully Clean Science can build a world-leading franchise there. We've historically been big fans of the diagnostic space. Dr. Lal Path Labs, Metropolis, Vijay Diagnostics, these sit in various Marcellus portfolios. Over the last 3-4 months, we've also developed a liking for hospitals. So we've built a position in Rainbow Hospital. It's a Hyderabad-based pediatric and maternity care chain, 1,700 beds spread across various cities in South India. But I think this is a broader theme. As Indians get more affluent, as health insurance becomes more embedded in our lives, I think the private sector hospital space is looking very interesting for us.
That's an impressive hospital as well. I visited it.
Right.
We had done a special show on CNBC-TV18 as well.
Just one follow-up. You said that you're looking to the private sector capex area as well, right? I mean, L&T, of course, has been a big mover this year, but what else? Where else do you see potential despite the rally that we've seen?
So we haven't got Cummins, but I wish we had. I think Cummins remains a singular play on the genset space. It's an unchallenged player in gensets in our country, especially the larger gensets. See, what's also happening, if you just join the dots, every week 3 to 4 global capability centers are opening in India. The only genset which can fire up a GCC as a backup is the Cummins genset. Similarly, factories are coming up, hotels are coming up, new office buildings are coming up, and almost by default, these buildings, this construction capex needs a Cummins genset. So I think that's an area where it's a well-known company, it's a world-leading company, no great secrets here. So that should be a default play on the private sector capex story. Beyond that, in small and mid cap, there are several interesting Indian light industrial manufacturers who will do really well on the back of a capex boom. We're trying to pick and choose our spots, because it's also it's relatively clear that there will be FDI. European and American industrial companies are going to come to India. They're going to acquire players in India, and they'll try to become part of the Indian landscape. We're the only part of the world where steel consumption is growing at, it's hard to believe, but steel consumption is growing at 19% as per the latest capex data. So we will see foreign companies coming to India, setting up or acquiring smaller Indian businesses and revving up competitive intensity.
In real estate, Saurabh, what's your exposure? I mean, how do you...
So we don't invest in real estate developers per se, because as I've historically said, barriers to entry remain reasonably shallow. What we do is plenty of investing in building materials, right? So Pidilite, Asian Paints in the large cap portfolio, inconsistent compounders, Astral Poly in our mid cap portfolio. Actually, Astral Poly is also now in our large cap portfolio as well. Serra Sanitary Ware in our small cap portfolio. We did a trip last week to Gujarat to understand the building materials boom. And I reckon we got 3 years of straightforward runway on pipes, paints, tiles, sanitary ware, because of the boom in affordable housing. These are houses, say, to 10 lakhs to 15 lakhs ticket size real estate developments. That's an enormous boom. It's got PMAY money behind it. It's got mortgage finance from the Aavases and the Home Firsts behind it. And that boom, I think, lasts several years. That will fire up the building materials, further fire up the building materials play.
Although even on real estate builders, and by the way, we have a real estate company joining us next after this conversation, there's been consolidation towards quality builders, right?
There has been, yeah.
So doesn't that kind of bode
the challenge is what happens in the next bull run, which is what we are living through. You once again see entry, and once again you see dilution of rookies. So in fact, I was already speaking to some of the smaller developers in Gujarat, and I was asking them about their IRRs that they get on residential real estate, and already the IRRs on resi real estate are on the way down in the less organized markets of Gujarat. Remember, Bombay is a more organized market, and therefore entry for a newer developer is harder. But in less organized markets, already you're seeing new entry, which is putting pressure on the returns that developers get. So such is the cycle of free markets. It's a good thing. That's how it should be. When you have a sector doing well, it invites new entry. If the barriers to entry are shallow, Prashant, then the incumbents' return ratios get pushed down. The ironic thing, the reason we like building materials is it's much harder. It's much harder to enter, say, sanitary ware and take on Cera. It's much harder to enter CPVC pipes and take on Astral and so on and so forth. And hence, the building material seems to us to be a more structurally solid way to play what looks to be a pretty long boom in construction in our country.
All right.
Just a quick disclaimer, all of these stocks, I have them. My parents are our clients, so they have them in our portfolio, and 9,000 domestic and foreign investors have these stocks in their portfolios.
Well, thanks very much, Saurabh. Great to have you with us here. It's a pleasure speaking with you here on CNBC-TV18. Actually, Saurabh, if you want to stay on and listen to the next conversation, that's an interesting one. Prestige Estates is the company we're speaking with. It's been one of the big winners of 2023. The stock has seen a stellar move. It's up 150% nearly this year. Mr. Irfan Razak is with us, Chairman and Managing Director at Prestige Group. Mr. Razak, great to have you with us here, sir. Thank you very much for your time. I mean, it's just been amazing. And if one has been a Prestige shareholder, one is feeling prestigious. One is feeling happy. So you heard Saurabh is here, and he's listening in as well. Just comment on that a little bit. The accepted wisdom in a way is that we're in perhaps year 2 or year 3 or what will be a 7-8 year kind of upcycle for real estate, for the real estate market per se. Just comment on that first, and then some of the points that Saurabh made, if you were listening in, sir. Go on.
Good morning, Prashant. Actually, it's quite an interesting conversation you had with Saurabh. Yes, the real estate investments, home buying is here to stay. I would always say it's the tip of the iceberg. And like he said, it fires up the entire ancillary industry, the support industry that is there supporting real estate. And that is, if you look at it, it is every material conceivable for, I think we support almost 230 odd of these industries. And that's where the good news is. And it's just the beginning. I mean, this housing, urbanization is happening very rapidly. People need homes. We need to build more and more homes. Yes, in which category is the question? And I mean, the obvious answer is we need to cater to the bottom of the pyramid, while we also are doing luxury and premium homes. So it's a mixed bag that we have to be on, and that will be the winner. And the volumes will come from the mid-income housing.
Mr. Razak, good morning, and Happy New Year in advance to you and your team at Prestige. Now that we're entering into perhaps what could be a long rate cutting cycle, it could begin with the Fed, the RBI could take it forward as well. Do you think that the demand will go up for real estate inventory and for houses compared to what we saw in the rate hiking cycle, or is that just on paper? I mean, does it really happen? Does it really play out like that? And what is your expectation for the full year?
No, I see it's a feel-good factor. See, when the rates did go up, everybody was having that fear that people will stop buying, but that didn't happen. But the thing is, if the rates don't go up either too much or go down too much, I mean, there is a feel-good factor. Obviously, if there's a rate cut, there is that cheer, and there'll be that many more commitments that will happen. And what it does really is, if there's a rate cut, it gives that much more sort of money in the pocket for the home loan for the home buyer, so they really can buy a slightly more expensive house. Because today everyone is looking for that one extra room in their apartment, and that is what is also helping us in the sense they this work from home culture, some space for themselves. So that realization has come. And I think a rate cut will definitely help in us selling a slightly more larger or bigger product.
All right. Hi, Mr. Razak. Good morning. Thanks so much for joining in. Nigel on this side. Well, tell us what percentage of your sales come in from new sales and how much of it is coming in from the old inventory?
No, that's an amazing question, because today all our old inventory is almost sold out. So we hardly have any old inventory, and whatever is coming only from new launches. That is why there's a huge dependency on keeping on launching new product. And the quarter that we don't have a big launch, that quarter we have a little bit of a slowdown in the overall top line revenue. Having said that, now we've been launching quarter on quarter a lot of products, different cities, and that's helped us to sort of pump up our top line. Like now in Mumbai, I'm waiting for my Ocean Towers, the RERA number, which is likely to come today. Once it comes in hand today, we were hoping to get it much earlier, but then, okay, if it comes today, hopefully in the next 15 days, we'll notch up a lot of top line revenue. Similarly, we did a big launch in Hyderabad in the beginning of November, and that also helped us get a huge revenue. So this quarter was dependent on Hyderabad, Mumbai, Bangalore. We did a small launch, and then see now we hardly have inventory in Bangalore. And whatever the good news is, whatever we are launching, it's getting completed. It's just there's nothing left over. So then there's that much more pressure for us to see that the new inventory comes in and we get the revenue.
So you're targeting 20,000 crores of sales in FY24. What would it be like in FY25? What could the reasonable growth be?
I see when we did that 13,000 in FY22, I gave a target of about a growth between 20-25% on that. And now the good news is we inshallah we should reach, and we will reach that 20K mark for this financial year, that is FY24. Going forward, yes, the teams are working hard in different geographies, seeing that, you see, it's all production. Basically, it's planning, approval, all of it, and there's a phasing out bringing in the product into the market at the right time. So with this sort of push, and if everything goes well in terms of getting the RERA, getting the approvals in time, I'm sure FY25 will also have a growth of about 25% on the existing base, because the base is getting larger. I don't think we'll slip behind, but I'm very confident. I'm very positive that there will be growth on that large base.
So, Razak, what you seem to be telling us is that the only constraint is, approvals. Not a constraint, but how fast you can get approvals. That's about it, right? Because that's how fast you're able to sell these projects as you launch them. Sorry, you want to come in, sir?
It's the raw material. See, for me, raw material is land. And I need to see that I have the right type of location, the right type of land. The teams have to work, conceive the drawings, conceive the plans, and then get all the approvals. There are lots of approvals that you need to get to the final approval. So, right from your fire and environment and everything else. So it's a big work, a big job that we have to do. And it takes about at least a minimum of a year from the time we start conceiving a project to bring it to the market. So that's the type of level of work. And that 1 year, I'm saying, is the minimum time, not the maximum time. So that's how it is. But I think our team has really got the art of doing it well. And we seem to have sort of mastered that. And that's how we are able to bring in more and more product into the market. So once it comes in, we are very confident there is a demand and people are buying.
Mr. Razak, I just wanted your thoughts on it. I mean, I don't think there's a definitive answer with anyone. But how much is the real estate cycle dependent on the stock market cycle, in your opinion? Because, I mean, the one thing which is just a big boom going on, right, in stocks and equities. There's the wealth effect impact as well, which is well understood the world over, not just here. So any is it kind of sort of one feeding into the other? Your thoughts on it?
It's just not the stock market. One thing is they're not related to each other, but like you really said, is the wealth effect. It's just not the stock market. It's the general share. It's the economy itself. It's the business itself. And people are into money if there's got spare cash and they would like to invest. And the investment is either in the stock market or real estate. And now real estate has found flavor. People have seen growth. And of course, they've seen huge growth even in the stock market. So it's a trade-off, and where the money goes is another thing. But ultimately, everybody would like to have a home, and everybody would definitely like to, sort of, if they've got the first home, maybe upgrade to the second home. And of course, we used to do strata sales of office. Now that's sort of tapered off. We're not doing it anymore because it's a lot of management that goes into it, a lot of executive time that we have to spend when we do strata sales. So rather completely...
Mr. Razak?
Yes.
Sorry, I don't mean to interrupt you, but since you were talking a little bit about the office space, commercial space, etc., what have you made of the new SEZ rule that has been put in place? And I want to understand what is the percentage of commercial real estate assets that you have in this SEZ space, and what would the impact be?
Now, the impact will be very positive because SEZ had sort of tapered off, and many companies wanted to operate out of the SEZ spaces. There were many buildings that were ready and that couldn't be occupied only because they were SEZ and there were many users who were non-SEZ. So by this rule change, you just pay back the duty, and this rule change will bring in a positive effect for commercial real estate. A lot more space will get unlocked, and people will be able to occupy these spaces, and then the vacancy levels will drop. So that's a very positive move. I think government also understood that and realized it. And there's no loss to the government. Basically, all the taxes that duty, the benefit that the developer had taken has to be paid back. So it's a win-win for all. It's a win to the developer, win to the government, and I think positively, the thing is that the spaces will be used unnecessarily instead of lying vacant.
Okay. All right, Mr. Razak, we'll let you go on that note. Thank you so much for joining us. And, speaking to CNBC-TV18, you've been a star performer this year, both in the stock market and outside. So hope you continue to create wealth for your shareholders and provide, great homes for all your consumers as well. Thank you so much for joining us, and Happy New Year to you once again.
Happy New Year to all the viewers, and we hope that 25 brings in more cheer.
Okay. All right, sir. Thanks a lot for that. Let's move on. Let's focus to the banking space now. Krishnan ASV, the lead analyst BFSI at HDFC Securities, joins us now with his call on the banking sector. Krishnan, hi, good morning, and thanks for joining in. First, the immediate news flow that came through, right? SBI hiking lending rates on most tenures by 5 to 10 basis points. What kind of impact do you see because of this? And in general, how are you feeling about PSU banks like SBI?
Hi, Sonia. Very good morning, everyone. Very good morning to your viewers as well. Look, I think this is just a continuation of the transmission that's got to play out for the rest of the system as well. So purely in terms of what they have done now, and it reflects the kind of liquidity environment we are in. You saw what the RBI said in its last monetary policy as well. They want to continue with withdrawal of accommodation. So I think we'll remain in a tight liquidity space. It's still a scramble for deposits. And obviously, when the largest bank does this, and, obviously it has got a transmission effect on the lending side as well. Yeah. So that's on SBI. PSU banks in general, on a no-name basis, PSU banks are generally comfortable, at least as far as loan deposit ratios are concerned. But having said that, I think many of them may need to shore up their capital in light of risk weight increases that have come through now. So.
Okay. Now everyone's talking about banks coming back in a big way, right, in terms of stock performance. So ICICI Bank, IndusInd Bank are all at fresh 52-week highs. But for the private sector particularly, what's your call? Do you see more upsides? And, in terms of earnings, etc., what are you penciling in?
Right. So I think given that we were in a relatively easy environment for about a year and a half post the pandemic. That allowed almost everyone to flourish. Now things are a little tighter. We believe it's more beneficial for the larger entities, larger deposit franchises, that's banks and large NBFCs. I think they are likely to emerge stronger after this storm passes. And there will be a storm. I don't think this is just going to be just going to be lip service from the RBI. I think they want to see a material deceleration in growth. That will take a toll on the fringe players, on the marginal players. And so the competitive intensity should reduce. Ideally, that means good things for the larger lenders. We were generally conservative on loan growth even pre-November. We felt that loan growth cannot be running too far ahead of deposit growth. So we believe that the jaw needs to be far more conservative. And so our numbers haven't undergone any material changes from a loan growth perspective. But what will happen is the competitive intensity now reducing probably means a few good things in terms of pricing environment, etc. So purely from an earnings standpoint, I think there is still a little more lever available there. Having said that, I think the large cap names like ICICI Bank, etc., are the only ones where we see margin of safety now. Most of the other mid-sized players, NBFCs, we are stretching our assumptions a lot more. So.
If we start rate cuts, right, starting with Fed and maybe RBI, etc. Say, for example, something like an HDFC Bank, I'm bringing that name up because it's been discussed so much everywhere. On the retail side, I think a lot of the book is on fixed basis. So on the way up, they suffer, but on the way down, they actually may benefit as compared to the others. Just your thoughts, Krishnan.
Hi, Prashant. I'm not sure which bank.
HDFC Bank. HDFC Bank.
Oh, no. That's a parent bank. I don't think I wouldn't comment.
Okay. No, I mean, I thought, but broadly, do you think, what does it do to net interest margins across the board?
Should get better, provided there is transmission. Obviously, SBI has led the way here, but, on NBFCs, obviously, all of this was meant to ensure that the largest NBFCs, you are able to get some pricing power there as a bank. But it's not that easy in this environment to be able to, for an SBI to pass it on to a Bajaj or a Chola may not be that easy, right? So, of course, you can do some of these nominal changes, but, we are still to see effect of whether or evidence of whether the transmission or, say, pricing power on the asset side is actually playing out. We will hold our breath there. We are not so sure it's going to play out that easily.
All right.
So, yes,
Krishnan,
yeah.
Yes, go ahead. Finish your point.
No, I'm good. Please, go ahead.
Okay. All right. Thank you for joining us, and speaking to CNBC-TV18. Have a great weekend. We'll slip into a quick break. On the other side of the break, KEI Industries is the stock we're going to talk about. Anil Gupta of the company will join in to talk about their business outlook. Later, we'll connect with Suresh Sethi of Protean eGov Technologies to talk about their incorporation of a new subsidiary and what the plan is in their business. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, let's talk about KEI Industries. The stock has been a big outperformer this year. It's up close to around 100%. Quarter two, well, it was good in terms of growth. The cable segment is driving their revenues, while margins also expanded. Mr. Anil Gupta, the chairman and managing director of the company, joins us on the show. Hi, Mr. Gupta. Well, your shareholders would be very, very happy looking at the stock performance in this year. But let's understand a couple of fundamental aspects. First up, in terms of demand, how is demand on ground? And if you could tell us, what are your current utilization levels in both your verticals, that's in the cables as well as in the wires business? Any kind of pullback on wires?
Good morning. There is a very strong demand in the cable side. We are booked in all our cable segments, and in the wire segment also the growth is good, but it could be better, and I think it is improving month after month. Secondly, so far as capacity utilization is concerned, we are operating around 95 to 98% capacity utilization in cables and close to 70% in wires and flexibles. So, but we are debottlenecking our plants at the moment and trying to improve the cable capacity by close to 10% in next 3 months.
Got it. All right. Mr. Gupta, earlier you had given us this guidance, I think, that you're looking to grow by around 16 to around 18%. And I think margins you were guiding in that vicinity of around 10.5 to around 11%. So do you expect this mid-teen growth to continue both for FY24 as well as FY25? And is there an upside risk to these margins?
I think whatever guidance we have given about the margins as well as the growth, both will be maintained. In fact, we are almost heading towards close to 11% EBITDA. And also the growth will be definitely around 18% in this financial year. And going forward in FY25 also, we are likely to maintain this growth. And not likely, but we are sure that we will be able to maintain this growth.
Okay. I just want to go back to that statement you made, Mr. Gupta, on the wires business. You said growth is good in the wires business, but it could get better. Can you just explain to us, because if you look at the wire business in the quarter gone by, right? I mean, there's actually been a degrowth on your top line of about 3.5%. So when you say growth is good, what is your indication? I mean, do you think it can move to double-digit growth in the quarters to come? Just some numbers, ballpark, in the wires business.
We are expected to grow by close to 20% in volumes in wires and flexibles. Maybe it could be price maybe due to which in some quarter you may see the degrowth. But in volume terms, I think every quarter we have grown in this year also, and we are expecting overall 20% growth in volume terms in this whole financial year.
FY24, correct? Mr. Gupta, so this 20% growth in volumes is in FY24 for wires.
Correct.
Okay,
but,
and any early...
You were just showing stainless steel wire. Actually, stainless steel wire is a small unit operating within the company, and we have not increased its capacity for many years now. And the unit is performing well. But the turnover is fallen because of the substantial decrease in the metal prices from last year, and due to which, but in terms of volumes in tonnage, we have grown by 5 to 6%.
So across the board, what would the increase be in capacity over the next 1 year? How much are you looking to pump in, and what would it take the capacity to across all segments?
We expect to grow the capacity by around 15% in next 4 months in our existing plants. And next year, as we are undertaking a large capex, so next year, this year capex is around 500 crore, and next year also it will see around 500 crore capex. So next year we expect to increase our capacity by close to 10%. But in FY26, there will be a substantial new capacity coming up in our new plant coming up at Sanand near Ahmedabad.
And you told us about that to be completed in 2.5, 3 years, right? Mr. Gupta, good morning. Just to clarify, in the next 4 months, this additional 15% capacity is coming up for the cables business, where you're already at 95% utilization, right?
Correct.
Okay. In terms of the extra high voltage segment, I mean, in Q2, that provided the big pop in terms of earnings. How is that doing now, and what are you seeing there through the rest of the year and for FY25 as well?
It's doing well, and you will see the growth, similar growth traction in this quarter also and next quarter also. And FY25 also, we are bullish that we will be able to maintain this quantum.
So EHV will do around 500 crores this year, and next year, how much will it do?
Similar amount of, production.
So it'll be, so from 500 goes to 600 crores, 700 crores. What is the target? EHV?
Both anywhere between 500 to 600 crore, depending on the, order book is there, but depending on the clearances from the customers.
Okay, sir, always nice chatting with you. Thank you for taking the time out and speaking to us. Your stock has been a big mover this year, so congratulations on that, and hopefully the next year will be even better. That's KEI Industries. It's doubled in 2023. It's been a star of this calendar year. But let's move on. Protean eGov is the company on our radar. Now, as we know, this company implements digital public infrastructure services. So they are a leading PAN service provider as well. They have incorporated a subsidiary in UAE as a holding company for their international business. To discuss more on this development and other business opportunities, we have Suresh Sethi, who's the MD and CEO at Protean eGov Technologies, joining us. Suresh, thanks a lot for joining in. I want to first ask you about the business growth. The first half of the year, you saw your revenues grow at about 36%. What is the expectation in terms of the second half? Do you think you can maintain this kind of trajectory? And what are we looking at for the full year? Suresh, I think you're on mute. If you can just unmute yourself.
Yeah, good morning and thanks for having me here. From a business perspective and the growth that we have seen in the first half of the year versus last year, we clearly see that digitization and increasing adoption of digital services is what is propelling the growth for us. So while, as you mentioned, there have been strong growth factors of 36% compared to last year in the same period, we clearly see that all our underlying business drivers are growing strongly, be it on PAN, be it on pension services or the ID services, and we expect the momentum to continue for the rest of the year.
Okay, so any numbers you can share?
We don't have any projections to share at this stage, but yeah, the underlying business drivers continue to grow strongly. And as I said, it's a larger macro phenomena linked to Digital India and the growth as such, which is coming out of there. And this is clearly all indicative and correlated.
Okay. On the margin front, there's been some amount of pressure. Can you explain that to us? Because this time your margins fell to about 20%, but you used to enjoy 22% margins last year. What are the pressure points now and what's the expectation by the full year?
So what we have done over the period of last 2 to 3 years, we've expanded into new lines of business. While the company historically has been strong in creating e-governance platforms, providing digital identity to the consumers, we are parallelly getting into empowering digitization of enterprises where we are building the data stack and digital onboarding services. And we've launched a new API marketplace in that space. So there has been a significant investment in people and in resources who are now creating open source protocols and technologies within the organization, full stack engineers. So part of the margin pressure has been because there has been a one-time investment in expanding teams to cater to the new lines of business. But we expect these to give us the returns as we go forward.
All right. Hi, Mr. Sethi. Good morning, and thanks so much for joining in. This is Nigel on this side. A couple of quick questions. One is, you've incorporated a unit in UAE. What's the game plan out there? And also, you've made an investment of around 15 crores in ONDC. So tell us the plan out there as well.
So Nigel, clearly, as I mentioned, we are in the space of creating digital public infrastructure. And as a company, we moved beyond BFSI. Our earlier assets were in the space of taxation and pension. And now we are looking at a multi-sectoral DPI contribution across digital commerce, across areas like mobility, health, agriculture, and education. As we look at the DPI adoption in India and our proficiency in that, we are looking at taking the same across to global markets, especially developing countries which are at the cusp of looking at creation of digital infrastructure at the foundational level. Our subsidiary in the UAE is a direction in that step. We are putting up a holding company over there, which will help us to create operating units in multiple countries, especially across the developing markets. With regard to ONDC, it has again been a strategic investment for us. As you know, we are contributing and powering some of the building blocks on which ONDC or the digital commerce ecosystem is running. And for us, it's a strategic investment into the network facilitator who is governing and building the entire network in that regard.
So how much would you own now in ONDC? Mr. Sethi, morning, Prashant here.
Yeah, Prashant, morning. So we have a 5.56% holding in the ONDC cap table as of now.
Okay, all right. Just a quick point. A lot of these deals, right, when you are able to go to other markets through this UAE subsidiary, this would be done government to government, and then you sort of, Protean would be roped in to execute? Or no, I mean, you go and pitch. I mean, how does this work?
So, Prashant, there are multiple aspects over there. Actually, it's a bit more, I would say, detailed. A lot of these countries today need a lot of advocacy and understanding of how digital public infrastructure needs to be created. And we are engaging at advocacy and knowledge sharing level. And then you're right, there could be, again, multiple options. It could be multilateral funding. It could be country-to-country funding. So in each case, the association differs. But yeah, at a digital infrastructure level, these are mostly government-driven, and therefore our basis government issuing tenders in this regard.
Just one last question from my side. For the local business, right, what is the market opportunity? Digital public infrastructure, I mean, I think we are the best in the world. I mean, India, in terms of the reach, in terms of penetration, has done fantastically well to push that, and you've been a part of it. But, and there'll be new things like ONDC and, there'll be more rails, digital rails built. But as you see right now, what's the total opportunity? I mean, if you can put a number to it, where you can kind of bid and participate to get a piece of the pie?
So, Prashant, one is our traditional businesses. Again, there are definitely headroom over there. I'll quickly take 2 minutes on that. So on PAN and pension, again, there is significant, pension is an underpenetrated society for us. So today we have around 6 crore accounts put together between NPS and Atal Pension Yojana, and huge opportunity to further grow that business. PAN, again, is not a saturation ID, so you only get it as you come into working stage in your life, or you open your first bank account. And therefore, again, a huge ability to issue more PANs every year, year on year. But coming to the new DPIs, if we look at areas like ONDC, digital commerce penetration in the country today is hardly in low single digits. We are talking about 4 to 5%. And interventions like ONDC are significantly going to open that entire ecosystem. And there are market projections to say there could be a 5 times growth in penetration by the year 2030. So as we are providing services at the infra level, which is more at the building block level, plus we are providing services to power the enterprises which come onto these ecosystems, we see a double growth coming from both of those areas into our business lines.
All right. Well, we'll end it on that note. Thank you for giving us a quick snapshot on your business. We'll slip into a quick break on that note. The market, by the way, is piling on those gains. So 21,300 is here. When we come back, Mitesh Thakkar will join in for some technical trades. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Okay, welcome back. The market up 130 points, 21,300 on the index. We're at the day's high. Mitesh is with us with what to do now. Mitesh, good morning. On the index, what should one do? If you're holding longs, I guess hold on. But on stocks, what's the recommendation?
Yeah. So I think, Prashant, there is no doubt in that. I think if you're holding long, hold on. And you can just trade your stop loss to about 21,180 on the spot, which is roughly about 130 odd points lower. But then, the idea is that you would want to ride as much as possible on the upside. So give some, space for fluctuations to happen. And on the downside, gas commodity is a buy. Keep a stop at about 145 half levels and look for a 155 kind of a target. And the other one which I like is Aarti Industries. which I would recommend buying with a stop below levels of 574 for targets of 610.
The industries is what you like. Got it. By the way, all these fertilizer companies are seeing big moves right now. FACT is up almost 9%. So that both on the volume and the price charts is looking very good. And specialty chemicals is coming back. So alkyl amines is also up about 4%. But let's get going into the commodity space now. Manisha Gupta is here to tell us what she's tracking. Manisha, good morning. What are you looking at?
Well, I'm looking at metals as a sector because while this week has been choppy, but we are headed for a weekly gain for most of the metal prices, whether it's precious metals or industrial metals for that matter. The trend has improved, especially on the back of Fed signaling 3 rate cuts in 2024, and that has been positive. It also has to do with the US dollar index, which is trading at near 4-month lows. That has led to many of these dollar-denominated commodities trading on the higher side. The Chinese data and a lot of that has come in today, but that is mixed at best. The recovery is uneven, and the street is still waiting for more stimulus measures to come in from this sector. But even then, when you stack up the data, China continues to be one of the major consumers for many of those metals there. The metals also have been taking some strength for the last couple of weeks now on the back of mine closures, whether it has been in Peru, Mexico, even Australia. And the disruptions is something that is adding to support in many of those prices there. And then apart from that, it also has to do with energy transition and underbought positions from funds who would want to get in metals at these lucrative levels is something that could be supportive as well. I want to start with gold and silver because that one is trading at a 1-week highs. We are looking at strong gains on that. Zinc has been an underperformer for the last couple of weeks, but that also is trading off the 3-month lows, and we have seen prices gain above $2,500 a ton there. Aluminum is the other one, and that rebound here has been actually the smartest. Overnight, we've seen 3% of gains come in for aluminum. That is coming off its 14-month lows as well. There is statements from Norsk Hydro saying that it has been about weak demand from industry, vehicles and manufacturing that did lead to sales down by 57% in third quarter, but fourth quarter seems to be stabilizing as it was. Also, markets are looking at the China's October import when it comes to aluminum, and that has seen a gain of nearly 10% in the month of October on a year-on-year basis there. If markets also are looking at support for palladium prices, rebound from 5-year lows onto that one. Platinum is trading at a 12-week highs. Copper prices trading near a 4-month highs as well on the back of supply concerns in Peru and Panama. So good day and good week really for the metal prices there. The chart should tell you on what we've done on a overnight and a week-on-week basis then. So as you can see, the overnight market has been really grand. 2 to 3.5% of gains is what we've seen across board. And on a week-on-week basis, this is the last 1 week actually, aluminum, platinum clearly outperforming with 4 to 5% of gains. Zinc, copper also in the positive. Gold and silver prices, and that should come in on your screens because gold also has performed quite strongly. 2% of gains in this week with silver coming in also on the stronger side.
All right, thanks a lot, Manisha, for that. Well, moving on, PharmEasy has raised close to 4,000 crores from its rights issue, with 1,300 crores being subscribed by Ranjan Pai. We caught up with Siddharth Shah, the founder and CEO of PharmEasy, to discuss about their rights issue and also how he plans to reduce Thyrocare's 100% promoter pledge. Listen in.
Subscription of the rights issue is now in fact a little north of 3,950 crores, which in a lot of ways I think is a big testament of support for what we are doing and the belief that ultimately we can literally become the best player in digital healthcare in India. Mr. Pai had made a commitment to subscribe to 1,300 crores as part of this round, but given that it's oversubscribed, I think we're all figuring out how much of an allocation will Mr. Pai get, how much some of the other investors get, because it was very clear from the way our rights issue was structured that the first right of infusing capital will come indeed to our existing shareholders. And the balance will go to Dr. Pai, but I think we'll figure out a way where Dr. Pai also gets a chance to participate. And in fact, he's been very, very supportive, right? And one of the big reasons for helping us get here. When the debt gets repaid, that will get away. We have reasonable or more cash cover. So what we're doing is Goldman's money was taken through issue of NCDs, which were in 2 different bonds. One bond gets repaid immediately, the other bond gets repaid within 12 months, right, ideally. So we're figuring those details out, but upon full repayment of the bonds, the pledge goes away.
In fact, catch the entire interview on Halftime Report that comes up today at noon, so do stay tuned in for that. Let's take a quick break on that note. On the other side of the break, Lata will connect with Jahangir Aziz of JP Morgan and Steve Englander of Standard Chartered on the Fed's unexpected pivot yesterday and what it means to India and emerging economies. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence.
Co-powered by